Well, the other one that's doing well actually today is Hindalco. As we told you yesterday, the numbers were quite good, though the problem is with regard to the Novelis business. Novelis business has been under some pressure. In fact, I spoke to the managing director, Mr. Satish, and started off by asking him about the tariff impact in the second quarter on their Novelis business and how is demand shaping up. Let's listen in to what he had to say.
The point was about Novelis's quarter. So when I look at the Novelis business, a couple of things have started to be tailwinds. First, the scrap spreads in the US especially have started to improve, which will be in the second quarter and the second half of this year, a positive tailwind. Other steps that we are taking to reduce the cost, our structural cost adjustment program is actually going well ahead of its time. So I think the other part, as you also rightfully mentioned, the end markets are very strong. The can market actually grew by more than 10% year on year. So a combination of strong market demand, scrap spreads improving, as well as structural cost reductions that we have put in place, give us the confidence that Q2 will be more or less equal to Q1. And then in the second half of the year, the steps that we have taken to bring back more production capacity to the US will help us, deal with the tariff issue as well.
All right, Mr. Pai, but if tariffs stay at current levels, should we rule out you going to around $500 per ton in this fiscal year, or do you think there's still a possibility?
No, as I said, the remaining tariff issue for us really is the volume that comes from Canada. In the second half of the year, we will move that capacity through various measures we are taking into the US. So even if the tariffs stay in place, we believe that the second half of this year, we would have mitigated the tariff impact.
So $500 per ton is a possibility still, is what you believe. That's an aspiration.
We will be certainly moving towards that target.
All right, got that. So that's about the Novelis piece then. Let's come back to India. The aluminium business continues to stride ahead, and you're doing closer on $1,450 to around $1,500 per ton in the aluminium business. You have some quantity that's also hedged, but do you think that you can continue to hold on to these levels either in the absolute term of 4,300 crores or in a per ton basis? Is it sustainable, the India aluminium business?
I think that the fundamentals of our business in India are very strong. We run a very sound operation with good control on our cost. Operating efficiencies are running very well. So if the LME stays north of 2,500, which it is today, and the coal costs do not escalate, the Q2 will be slightly higher than Q1 because it's the monsoon season. But overall, I think that the current levels of profitability are sustainable. The big caveat I'm giving again is that LME should be north of 2,500.
All right. And what kind of LME prices you're working with? Since you have a lot of uncertainty with regard to Trump's tariffs, but the hope is that China as well will pepper their economy, which in turn could help metals on the whole. So what is the range we should work with?
So look, the very clear thing that is coming out is both aluminium and copper, the two metals that we are dealing with. Supply and demand is very tight, and the end market demand for aluminium and copper is also extremely strong. So if you can see now, both the metals, the prices are holding firm. So for LME, we are working, as I said, with a range of around $2,400 to $2,600 per ton.
Got it. Copper, in the past, you've said that we should be working at around 600 crores per quarter. But this quarter as well, you went ahead and surprised the street at around 670 crores. What's it? Would you like to up that guidance from 600 crores per quarter?
See, the copper business is a very varied value chain. So there are many moving parts that go up and down. So I think the 600 guidance was given so that there is a base to what you can expect since TCRCs have dropped. But it will be 600 to 600 plus is our feeling.
Okay. Despite undertaking a big capex at Novelis, your absolute debt number actually has cooled off. That was a pleasant surprise. Where is that number headed from here?
Let's see, the Novelis debt numbers and the Novelis net debt to EBITDA, we have always guided in the next year or so as the Bay Minette project goes through its completion. The net debt to EBITDA will go up to about 3.5 and then start to come down. I think when you look at the consolidated balance sheet, the net debt to EBITDA is at 1 because in India we are sitting on a net cash of around 11,000 crores. And the India business is generating a lot of cash. So hence, the consolidated balance sheet will remain very strong. And I think this year our net debt to EBITDAs will be around 1.
Okay, all right. And what is the capex plan, sir? Just to revise that you have laid out for this year and break it up between India as well as Novelis?
So in Novelis, it will be around 2 billion with the Bay Minette project that is ongoing. And in India, we are saying about 7,500 to 8,000 crores, so about $1 billion.
Okay, all right. Well, that's Mr. Pai sounding extremely optimistic on prospects of Hindalco from here on. For the India business, the aluminium EBITDA can hold around current levels provided aluminium holds above $2,500 per ton and coal prices are subdued. For copper, the EBITDA number should hover around $600 on a per quarter basis, while Novelis, he's calling out that the past quarter, there's a basing out process in terms of EBITDA, and things will improve, particularly in the second half of the year, because of the cost focus that they are doing. And in fact, he believes that gradually that EBITDA per ton number for Novelis will start moving towards $500 per ton. So explains why the stock is doing quite well. It's a tailwind as well with regard to the Fed probably cutting rates in the month of September itself.